What's up guys? In today's video I'm about to explain the best chart patterns for you so you can get to use it and make money from the market also. I know you have watched a lot of videos, you have watched a lot of things on YouTube, and you haven't been able to learn it in such a way that you make money from it. Maybe some people just come, give you the diagram, show you some things about the diagram, and they don't get to show you how it looks like on the chart. But in this video I will get to show you on how it looks like on the chart so that you can learn to do these things the right way and make crazy figures from the market also. So stay to the end and make sure you like this video. Make sure you also subscribe to the channel. And if you're new to this channel, my name is Philip Joshua and I'm here to teach you on how to trade Forex. So make sure you watch to the end and get to learn these things where then from there you can get to make more money for yourself on the chart, guys. So let's get straight to the video. Let's not waste much of our time again. So just like the way I've said, I'll be teaching you my 5 best chart pattern trading strategies in the market, and I'll be explaining it in such a way that you get to understand it faster and make a lot of money for yourself on the chart also. So just stay to the end and make sure you learn something from this video. If you don't get to understand some of the things, download the video and watch over and over again. And if you're new to this community, we have our Telegram community also, whereby we trade together. Don't forget to join these things after watching this video. Let's get to the video right now.
So this is how the double top looks like in the market, and whenever we see these opportunities in the market, we have to go into the market aggressively because double tops used to work very well in the market and the risk is very low. So look at this place whereby we have to place a lot of entries in the market, and if you look at this place where I marked at my 8367.1, that place is the place whereby I'm expecting the market to get to. Then I will confirm that this trade is not going to work out, which is the first stop of this double top in the market. So that's where I'm expecting that if the market eventually goes to that place, then I will confirm that this market is not going to go in our favor again. But for now, we are currently aggressive on this market and we expect the market to get back to this place. Although if on a normal day I wanted to just take a very simple trade that won't take a lot of time, I would just love to use this place as my take profit. I will just use this place as my take profit if it's on a normal day, but right now I want to hold this trade for some time, so I won't be able to use that first place as my take profit because this market is currently on a very good downtrend. So I'm expecting the market to come and break this part, which we have our TP around. You can see our take profit around this place, which is this place. That's what I'm expecting the market to get back to. Then the market will even have to break itself. That's what I'm expecting in the market right now. So that's how the double top works in the market. Whenever I see it, you can go aggressive on it because the losses on the double top is very little, especially when you get it at the sniper points. So that's one good thing about double top. Let's get to the next pattern that I will have to explain for you also, so that from there you can get to learn some things about the chart and get to make more money for yourself. We have another chart pattern that I would love to explain for you in this video, and I'll be using this arrow to explain it for you so you can get to understand it and know how it works in the market also. So we have our double bottom in the market, and double bottom is just like an opposite of double top. It does the same thing, but in this part you buy in the market instead of selling in the market, but on double top you sell in the market. So let me explain how this one works in the market. We have our first bottom in this place, which is the first place whereby the market will have to come back to. Then from there the market will just have to drop a little bit to any close resistance point in the market. Then from there the market just have to come back again and get a retest. Then from there we can also get to wait for the market to come back and retest on our neckline. This is our neckline in the market. I will normally expect the market to come back to the neckline. There from there we keep pushing to the upside. This is for traders that are very patient in the market, but for the aggressive traders in the market, at this point they are into the market already. They don't need to wait for the market to give them thousands of confirmations in the market before they can know what they are doing. All they just need to know is get the spot or the place whereby the market is expected to get back to. Then from there they will just keep pushing with the market, and they are the first people that lose in the market. So if the trade goes wrong in the market, the aggressive traders are the ones that lose easily in the market. And also if the market goes in their favor, they are the set of people that make a lot of money more than some other traders in the market also. But for the people that are very consecutive in the market, at this point they expect the market to come back to the neckline. Then from this neckline the market will keep pushing to the upside. That's for the people that are very consecutive in the market. And this place is like a good neckline or a good entry point in the market, because once the market just get back to this place, that is a pure confirmation that this is going to be a nice uptrend in the market. Then from there the market will keep pushing to the upside, and from there you will get to make more money in the market. So that's how the double bottom works in the market. Let me get to explain other chart patterns for us in the market also, so that we can get to understand them and make more money from the market also. So just like the way I've explained before, this is how the double bottom looks like in the market. And if you look at this place whereby I mark out with this cycle, that's our first bottom in the market, and this place is our second bottom in the market, which has to come back and get a retest close to our first bottom in the market. Then that will give us a confirmation that this is a double bottom in the market. Then from there we can get our neckline around this place, which is our entry point in the market. So sometimes due to the candle that was formed around that place, you can see that this market did not even come back to get a retest, but due to the candle that was formed, this engulfing candle kept the market pushing towards the upside, and every other candle was not able to come back and get a retest again. So when we see engulfing candles in the market, after this we have to kind of follow up with the market and keep pushing with the market also. That's one thing you need to know also. You have to know the kind of candle that was formed after the movement in the market. So if at all it was a kind of little engulfing candles, it wasn't as big as this one, could have still expected that the market should still come back and get a retest around that place. But look at this, we have a big engulfing candle around this place, and we got other continuational candles around this place also. So that's a sign that this is going to be a movement toward the upside. No retest on this one. But if at all the market gave us a candle like this, let's say two of these in the market, we still expect the market to get back to this place, which is our neckline. Then from there we can get our entry if you're a consecutive trader. But if you are an aggressive trader, I think by now you should be in the market, which is around this place. You will take your position and you should be expecting to see what the market has to do already. You should be waiting for the market to either smash your stop loss around this place, then have something little to lose in the market, or let the market push from this place to the upside. Then from there you can get to make crazy figure on the market, because the aggressive traders are the ones that go into any position faster than every other trader in the market. So that's one thing about them. You have to also keep it in mind also. So let's get into another chart pattern in the market. Let me get to explain it also for you, so you can get to know it and know how it works in the market also. So another chart pattern that we take very serious in the market is the inverse head and shoulders in the market. So this one also is a strong chart pattern in the market, and we don't also play with it because it's a very profitable chart pattern in the market, and we get to use it whenever we see it also. So look at this other part, which is my left hand side. You see that we have the diagram already in that place, and it looks like exactly on the chart. So when you see it, you don't have to miss it also in the market, and this is how it looks like by structure. So I would love to explain the both of them for you so you can get to understand it. But if you look at this one whereby we have on our right hand side, which I'll be using this arrow to explain for you, it's a different thing from the one we have on the diagram, because sometimes you might get the structures and don't see the same thing in the market. So I had to bring out this one that I saw in the market and explain it for you, and I also had to explain the diagram for you so you can get to understand it. Also this place whereby I had to bring this one out so I can explain it based on how it looks like exactly on the chart also. So let me explain this part for you so we don't have to waste much of our time on this part also. So on this place we have our left shoulder, we have our head, and we have our right shoulder. Why is it looking upside down? Because on this inverse head and shoulders we buy in the market, not like the regular head and shoulder whereby we have to sell in the market, but on this one we buy in the market. So look at what happens when the market just rise towards the upside. It forms the head in the market, then from there the market just have to come back and get something equal to this part. From the left shoulder, the market will just have to kind of use the both shoulders as the neckline in the market. Then from there sometimes the market do retest on the neckline due to the candle that was formed in the market at that point. But from this neckline point you can start buying the market, because the market has confirmed that this is going to be a good uptrend. So when it comes to this one, you can see how the things are going in the market already. It is based on the candle that forms in the market that will determine if the market is going to come back to the neckline or not. So sometimes you see whereby the market has to just come back to the neckline due to the candle that was formed around that place. So looking at this diagram, I would love to explain more for you so you can get to understand it, how it looks like exactly on the chart, before you can take any decision in the market when you want to try it out on your own chart also. So look at this place whereby we have our first shoulder around this place, which is our left shoulder. Then from there we got our head around this place. But on this one something happened which I will love to show you right now so you can get to understand it also. So looking at this place, you can see that there was a little bit consolidation around this place, and from here you can see that the market tried to go to the upside, which is getting back to this place. Then from there we can get our second shoulder. But looking at this place, you can see that the market wasn't able to go smoothly towards this place, then come back and give us our second shoulder. So we have a little kind of retest around this place.
Then once we get that retest around this place, the market will just have to push towards that upside, whereby we're expecting the market to just go smoothly. Then from there we can get our second shoulder, which is our right shoulder in the market. But on this one, you can see that the market wasn't able to go smoothly, so the market has to kind of consolidate a little bit around this place. Then the market has to take this place out, which is the first place whereby the market had to reverse around. Then the market will just behave as if it's coming close to this first point, which is our first area, which is our head also in the market. Then from there the market will just form another movement, which doesn't require that we should wait for this place, which is our neckline, to get retested before we can get to the market and make more money from the market. So looking at this place now, the market just came, then got a retest around this place, making it to look more like a double bottom pattern in the market. But this is not a double bottom pattern, because this is a very good inverse head and shoulders in the market, and this is how it looks like mostly on the chart. So once the market got very close to the head and got a retest, we had a kind of rejection around this place. And looking at this rejection in the market is a sign that this market is never expected to go to the downside again. It's a sign that the buyers are interested in this market, or the buyers are in control of the market already. So after the rejection around this place, you can take your entries when you see this kind of opportunity in the market. You can take your entries, and from there the market will keep going towards the upside. So that's one good thing about this inverse head and shoulder, not like the regular head and shoulder whereby you just have to wait for the market to come back, get a head, then from there get your second shoulder, then from there you can just keep pushing to the upside. So this is how the inverse head and shoulder looks like in the market, and if you apply this very well in the market, you are going to make a whole lot of money from the market also. So that's one good thing about the inverse head and shoulder in the market. If you understand the market formation on your own, you will get to make crazy amount of money from the market also. So that's one good thing about trading, and that's one thing you need to know about this inverse head and shoulders in the market. So looking at this place, you can see that we have bullish candles that keep pushing to the upside. Somehow the market might come back and retest, but I don't think so, because we have a strong rejection around this place. So we don't expect the market to come back and retest around the neckline again. And if you look very well, you can see the candles that is being formed. This kind of candles doesn't retest at all in the market mostly. That's one thing I know about those kind of candles also. And if you apply this in the market, you get to make more money for yourself trading this inverse head and shoulder in the market. So let's get another chart pattern in the market. Let me get to explain it for you again, so you can get to understand it faster and make more money from the market also. So another chart pattern that we have to look into very well is the head and shoulder pattern in the market. This is very important in the market also, and if you don't get to know it very well, you have to make a lot of mistakes in the market and lose a lot of money from the market. So let me get to explain it faster for you, so you can get to understand this also in the market. So this is how the head and shoulder patterns looks like exactly in the market, and I'll be using this arrow to explain it for you, so you can get to understand it faster and make more money from the market also. So looking at this place, we have our first shoulder in the market, which is our left shoulder, and on this place we have our head in the market, which is the main place where we have to know if this is gonna be an head and shoulder pattern in the market. Then we have our right shoulder in the market, which is a confirmation that this is gonna be a head and shoulder pattern in the market. So once we get the first shoulder and the market has to come and break the first shoulder and get the head, then we expect another shoulder around that place. So in this place now, you can see that we have another shoulder very close to it due to the candle formation that was formed around that place. If you look at this place, you can see that this is a pin bar, and getting the market close to this place again is not possible because of the pin bar around this place. So the market will just have to come very close to this side and get a confirmation that this is going to be the right shoulder. Then from there the market will just have to come to this point, which is our neckline in the market. And if you look at this place, which is our neckline, I would also love to show you one secret about this head and shoulder patterns in the market, so you can get to know it when you see it in the market. So whenever we have the first shoulder in the market and we get the head, we expect the head to break this part, which is the first shoulder. Then once the market has to break this first shoulder, then that is a sign that the left shoulder is going to bring out a right shoulder. Then from the right shoulder, we get to confirm that this is going to be an head and shoulder pattern in the market. Then from there, we expect the market also to get a retest around there due to the candle confirmation that is formed in the market. So looking at this place, you can see that the retest happens so fast, and we had a kind of strong candle confirmation around this place, which determines that the market shouldn't come back and retest it again. So looking at this candle confirmation around this place, you can see this green bullish candle around this place. It's a sign that the buyers have lost strength in the market, and from there the market kept dropping to the downside also. So that sign is a very good sign in the market if you're someone that understands the market very well and you understand the movements of the market also, because not everybody that knows how to read the candles in the market. If you don't see these kind of things in the market, you expect the market to get a retest around that place, especially for consecutive traders in the market. But the aggressive ones have entered the market since, because what they wait for is for the market to just get this head, then break the left shoulder, then from there they just get their right shoulder, and from there they'll enter the market and start making profit before you start making profit in the market. But whenever you want to choose this aggressive part of trading, you have to make sure you know that the market can go against you faster than the people that are consecutive in the market, and sometimes the market will go in your favor and you make money in the market. So that's one thing about this consecutive trading. Some people do call it the sniper traders in the market. So that's how they make their entries. They enter before everyone, and if the market goes wrong, then they get to lose more money faster than those waiting for the market to come back to a consecutive zone. Then from there they can enter the market, just like this neckline point. That's a consecutive area in the market whereby the consecutive traders get into the market, and from there they will keep pushing the market towards the downside. So that's one thing about this one, and that's something you need to know also, so you can get to know more about the short patterns in the market and get to do the right things at the right time. So we have another good short pattern in the market right now, which I would also love to explain for you so you can get to know it and get to know the right things to do in the market and make crazy figures for the market also. So we have this one which is called the falling wedge in the market, and this one works especially in bullish markets whereby the market will just come and have a consolidation around a trend line. So on this falling wedge, you expect the market to get a retest to the most valid support zone. Then from there the market just have to break out of the trend line on the falling wedge. Then from there also the market will just come and have a retest if the market has formed candles that will bring back a retest. But if the candles are too strong enough to push the market towards the upside and go without any retest, that's it in the market also. Then from there the market will keep pushing towards the upside. So on this one we have our trend line, and we also have another trend line towards the downside, which is a trend line that helps us in checking the movement of the market in order for us to know what exactly the market is doing. But the most valid one is the first trend line in the market, because we're expecting the market to get back to a support zone. So we might even have other tools in the market, just like our horizontal line in the market. Then we just expect the market to just come back to that horizontal line. From there the market will just peak and start going to the upside again. So looking at this one, you see that the trend line wasn't broken in the market, and that is how it used to be. We have our first test in the market, which is our first point. Then we draw our trend line from there after having our second retest in the market, because at this second point we have to kind of know if the market is gonna go by this falling wedge in order for us to get back to that support zone. Then from that support zone we keep pushing to the upside. So once we get our second retest in the market, we bring out our trend line and draw it in the market, facing it towards that support zone that we're expecting the market to get to. Then from there the market will start pushing towards the upside again. So looking at this place, you can see that the first zone was correct, the second zone was a kind of touch, it wasn't broken in the market, and on this third one we expect the market to touch it again. The third one is the final one that confirms that this is going to be a very good falling wedge. But this is where we get our confirmation, because we have our trend line in the market, and trend lines are very good when it comes to falling wedges in the market. So once the market gets back to test it in accordance to the candle that was formed around that place, because sometimes you expect the market to come back and get a retest around this place, whereby the candle that was formed around that place has something different to tell you about the market. But since you don't understand what the candle meant, you might keep expecting the market to get back to this place and get a confirmation. Then from there the market will start pushing to the upside continuously, and you will get to make nothing from the market. So that's one thing about this one. You have to know the candle that was formed around this place, and if it's a candle that you are very sure that the market will get back to, then you expect the market to get back to there. Then from there you can just get your consecutive entry in the market. And don't forget, this is the place whereby the aggressive traders enter, especially those people that love taking the snipers in the market. They just play their trade around this place because they're always ready to race first and see what the market has to do. They don't used to wait for the market to do a lot of things before they get into the market. What they believe is that once the market gets to that place, it's expected to do its things, and if the market refuses to do its things, then they will just have to get into the entry and expect the market to either stop loss or eat their take profit. But what they believe in is that they don't believe in risking too much to make a lot of money from trading. They just have to find their snipers around this place and get to make more money from the market faster also. So that's one thing about people that use these sniper entries or these aggressive entries in the market. So let me get the chart for you so you can also get to understand it when you see it in the chart also, so you can know what you're doing in the market and get to do it the right way. So this is how it looks like in the market. This is how the falling wedge looks like in the market. And looking at this one, you can see that the market got the first touch around this place, got the second touch around this place, and also got the third touch around this place. Then looking at this side, you can also see that the market tried to kind of break it, but the market wasn't able to break it. So the market came back and got another retest. Then from there, the market has to come back to that support zone, but we're expecting the market to get to. Then looking at this place, you can see that there's something like a pin bar around that place. Then from there, the market started going towards the upside again. This place is where the market was expected to break into the trend line. Then from there we can get a retest, but we didn't get our retest around that place. So the market just came back to that very place already. And from there the market has to form a candle that is telling us that this is going to be a continuational pattern in the market. And getting to this place, we got a continuational pattern in this place. And from there the market kept pushing towards the upside. So that's one good thing about this falling wedge in the market. Either the left side or the downside becomes the main point where we have the good trend line in the market. Because looking at this page, you can see that the best trend line we got in this market was on the downside. And looking at this upside, the trend line was broken many times, which is a sign that the trend line wasn't strong in this one. Because in this one, the downtrend line was stronger than the uptrend line. Then from there, the market started pushing towards the upside also. So that's one good thing about this falling wedge in the market. You can trade it and make a lot of money from the market also from it. Because it's a very good chart pattern in the market, and it works mostly on all the market in the market. So you have to just get to know it well and know when to apply it and when not to apply it. That's one good thing about this falling wedge in the market. I'm very sure that I've learned a lot of things on this video already, and if you're someone that wasn't able to kind of grab everything once, you can just download the video just like the way I've said in the beginning. Download the video and get to watch it over and over again. Then from there you can get to master these things very well in the market, because this is not just a content, this is an educational content. You can just download it or come back on YouTube and watch it over and over and over again until it sticks to your brain. That's one thing about educational content on YouTube. So just get to watch it over and over, just like the way I've said. And don't forget to subscribe if you're new to the channel. Don't forget to like this video, and don't forget to share it with your trading friends so that they can get to watch these videos and learn on how to do these things on the chart also, guys. See you in the next video. Peace and love.